I think they see trading and financial markets as the rebel way. I don't want to do university. I don't want to work. I want to get rich from home and prove all my friends wrong and my family wrong, okay? A lot of the narrative about trading is this Wi-Fi money. I cannot blame people because if 99% of the advertising, and also I receive 100 advertising per day, it's a coconut on the beach. The new world-class edge, it's a pool of talent from all over the world with a simple goal in mind: bringing realistic expectation to the trading world for free.
Well, Fabio, welcome back to World Class Edge. It's been a while since we had a chit chat in front of cameras.
Thank you, Andrea.
I think the last time was in my channel, and then you blew up on social medias with the live trading at Words of Wisdom, Chart Fanatics, and you're one of the. You launched this format of live trading, which it's kind of normality for you,
but seems uncommon for the industry.
Seems uncommon. It was very
trade
uncommon.
free?
This is crazy. Like, it literally was the highest, and I think it still is, the highest viewed video on my channel, the highest viewed video on Chart Fanatics channel, the highest viewed video on Words of Wisdom channel. Yeah. And it's, I think, because it was really the first time someone went in a place, no script, no nothing, just a pure chart. Let's see what fucking happens. And a lot of people may think, it's predetermined and
we shoot one time, and the other time we shoot, I lost and we uploaded anyway.
Yes. So this is crazy. This is something I think I wish I saw more in the industry. And why do you think people loved it so much? And why do you think there's such a lack of real traders?
So I think they love so much because they tried this. In the beginning, it was like, you see these bubbles, you think it's a video game. Then they really tried, they started testing, and I received message from people surprised. Bro, it works. Like if it's something that should not work, because probably they went through 30, 40, 50 RSI, MACD, moving average crossover strategy that breaks really fast. Order flow is structural. Order flow is how the market interacts with orders now. So it's not something that can break tomorrow because it's the nature of the market, same as option flow. So the feedback were pretty nice, and I think it blew up because it was like the only time where in the industry you have someone going to do something live without knowing the outcome. So if the outcome is really bad, you risk also, like the World Trading Cup. If you blew up the account, you can be seen as someone that went at the top of the leaderboard, then went down, and you get judged. The same is when you expose yourself to live trading. Like I also nowadays do live trading in front of people. So when you are there, you are constantly judged, and the people evaluate you based on the performance. That is something that should be like this for a trader, no? So I think all this mix of stuff, and also the amazing skill of Ritz in making the right question entertaining, created this episode that blew up. But at the moment in this episode, we're missing a lot of stuff. Like as of now, I will add the option flow. I will add a lot of additional stuff that I'm using at the moment. But I think to start scalping, taking into consideration what it's actually moving the market and the interaction that the order have with the price, so the volume spread analysis is the best way to scalp and to start from my point of view. So for all these reasons, it blew up. Really happy about it.
And what do you think is the biggest misconception people have about scalping specifically?
Well, the biggest misconception is that the more the execution, the more the money. So they think that is not something about refining the opportunity, something about the more action you take, the more trades you take, the more money you will make. And that's the reason why everyone thinks that scalping is more profitable than swing trading. And this is not true at all. Because, for example, we traded live also one strategy for 1 year in front of people in the swing trading, and actually this was the highest win rate strategy that we ever executed, no? So this is not true at all. Scalping, I love scalping because it's giving you a huge amount of sample, so it's faster to validate, specifically if you want to bring an institutional audit, and you have a huge amount of data sample to work with. In swing trading, maybe you have 50, 60 execution per year. It's good, but it's not enough data to work really deeply in what you are doing, no? So refining from AAA setup to AA, you cannot do with 50 setup, but you can do with 2,000, 3,000 setup. It's enough data to dive really deep and understand, okay, this one I will remove, the profit factor goes up in 0.5, it's enough, okay? I will take less execution, and this is the work of a scalper. It's not only execute.
Yeah, because that's the risk of, you know, a new trader when it faces with all these execution. I think the after the first hour scalping, your quality decision starts going lower and lower and lower, start to decline, and there's a higher risk of, let's say, people getting more emotional about it because there's so many decisions that they need to take, and it's not necessarily for everyone to scalp at the pace.
People get really emotional. I'm one of you,
Yeah.
Like there are some sessions where the market stay in consolidation for 4 hours, and maybe you try to get the directional play, you take one stop loss, you take 2 stop loss, the third one goes to break even. I also have the revenge trading impulse. The only difference is that I can control it, and if I really want to try one last shot opportunity, I do it with proper risk, without doubling. But I also have negative days, negative streak, like everyone else, no? And specifically the prop firm industry, the CFD industry, they play on the fact that we as humans, like Tom Hogarth says, we are not designed to trade. Because, think about it, when you are in a losing streak, okay, the market is telling you, look, your strategy is not performing at the moment, okay, because maybe you have a trend following strategy, the market is compressed, you should stop. But our mind is saying, I will not go to sleep with a red on the account. So I will take one more opportunity, and then one more opportunity, and then one more opportunity. And if you double the risk with martingale or stuff like this that beginners do, you end up the day with a huge loss. You will either stop trading or either think it's a scam. Okay? But if you go over it and you go over the plan and you review, you notice that when your strategy was not performing, you double risk and you took more execution that you should have taken. So at the end of the day, this is a psychological problem. And on this, algo trading is superior.
Yeah, of course. Of course. And also I would say scalping is, I mean, trading in general is stressful on the body, right? And I think people have a great misunderstanding of what trading really looks like. Mm-hmm. And they think it's this, you know, very comfortable or very fun thing to do, which sometimes is. And, you know, I think I would like to hear your opinion on how much do you need to like trading? Because there's a kind of a balance, I think, between being passionate about the markets, mm-hmm. which you need, in my opinion, to be successful. But at the same time, you shouldn't, you know, let that pleasure, let that dopamine influence your decisions, right?
So research and validation should be funny, trading should be boring. Right. So everything that you build around the strategy should be funny because you should enjoy the process of validating. It's like if you are nurturing and building multiple ways of creating wealth for you, okay? And this is lovely. And also going through research paper and understanding, like we were going on the option flow, no? Understanding the edging of the market maker, understanding the earnings surprise effect, understanding how the politician can beat for 10 years straight the market, okay? This is something I enjoy doing. But when I trade, for me, it's boring. It's good only when you have a community making jokes in chat, no? Make jokes, but the real execution part, when the market is consolidating, you take stop loss. If you get excited or if you get fear, it means that you are oversizing. Mm-hmm. Like the single day of stop loss of profit should not be able to change your life in any single way. It should be an amount that either you lose, either you take, you are okay, that's it. Maybe after a large number of sample, 100, 200, 300 days, this is an amount that can give you enough to live, to survive out of trading, but on the single sample, it should be relevant. So when you find yourself hoping or being fearful of the market going against you, you are already failing at the risk parameters that you are putting.
Yeah. And you think structural edges are, like what do you think it's the best, not the best, but maybe a series of the best trading approaches that can, you know, allow you to not just guess, but take advantage of something structural, in your opinion? What are the best ones?
So let's start with the fact that after my session, and Andrea knows it, I have like 3 or 4 hours of research. I finish my day at 3, 4 a.m., stay awake till late, and I wake up late. I'm the opposite of the morning routine. I'm the night routine. And in this time, I always like to research what it's structural and what is working for multiple years. During these years of research, I find one of the most consistent edge on the equities is the orb, supported by volume. It becomes the IVB. So you don't only watch the direction, you watch the interaction of the volume using big trades or using participation. This is one of the most consistent I tested on the last 10 years, executed live for more years, and it's still there, still working. Yes, you can have the quarters that is not good, specifically when there is Trump, but it works, okay? This is one. Another one that can be considered a structural edge is the one I was saying, the Congress members, okay? So you don't only have technical edge, you have informational edge. If me and you tomorrow can influence the outcome of the healthcare of US, okay? And at the same time, we can invest in healthcare stocks or pharma, we can get rich really quick, Andrea. We can get rich really quick. Now, the fact that these people are not paying for what they are doing, it's different, okay? Because they have some sort of immunity, and the fact that they need to file is creating a shield for them. But if you take Warren Buffett, and if you take the last 5-10 years performance of Nancy Pelosi, the difference is incredible, okay? Now, we want to say that she have just been lucky with hundreds of millions. It could be. I don't think luck exists when you are at this position of power. And I want to say also, Trump in the last filing is executing 3,000 trades, okay? And is one of the most profitable trader in history, okay? So good job, I'm not the best scalper in the world, he is, okay? 3,000 trades, I think not even in 1 year I execute. And, but this is not trading based on a structural edge. This is trading based on the priority information that you have. And unfortunately, this one cannot be done by me and you. The only way we have to do it is following the filing that these people do. The only downside is that this filing, it's not in real time, but it's after some weeks, 45 days if I'm not wrong. So sometimes it's too late, okay? Another one of this is my favorite, the structural edge that I'm going to say, it's my favorite, is the earnings surprise, okay? It's the most consistent. I think I took 20 execution only on one stock, DRS, Leonardo, and the win rate is just crazy, okay? Because you have a small risk. You know why it structurally works, because you have a strong information that is coming in a short amount of time, that is the new earnings. And when the surprise is so big, the players will get a huge slippage if they execute immediately, okay? So it creates a huge amount of resting orders in that gap. And this is your window of opportunity for that test with a stop loss below to take the drift, okay? Now, consider that you have a win rate of 50%. Let's not go on 70, 50%. The gap is usually 3 times less, 4 times less than the drift that you have in the next 60 days, okay? Let's say that is only 2 times smaller, okay? You have a 1 to 2 with a 50% probability. And this is an incredible data that you can have, considering that on stock picking, for the majority of hedge fund, it's really difficult to beat the benchmark. Also, this edge have a downside. And the downside is the fact that it's not liquid. So what we can do here as retail players with 7 figures, 6 figures account cannot be done by hedge fund, because they have the same slippage problem also on the way back on that gap. So when you talk about edge, you cannot talk about only technique. You need to talk also about liquidity capacity of the edge. Yeah. And the liquidity capacity of the edge on stocks, specifically in a high volatility environment, is not so big. On the S&P 500 is better, but I never find an edge so consistent as the earnings surprise on the S&P 500. What I find on the S&P working worse than NASDAQ, still there, is the IVB. And this is structural. Now, as of now, I don't use the IVB as a standalone system. I use the IVB as a bias system because it's really consistent. And then I use order flow to time better the market. Yeah. Even doubling or tripling the risk to reward without changing anything on the bias, for me, it's enough to increase the profit factor of the strategy.
And you use all of these strategies?
Yes, I use all of this strategy because, for example, let's talk about the last year, 2026, okay? IVB, January was really good. February, March, and June was... It identified correctly the bias. but you had a lot of fake breakout and getting back inside. Specifically when you have Trump tweeting, the market start, because all the market is waiting for a ceasefire or is waiting for a resume of the war, okay? So taking direction there is not really easy. When you have multiple, they say the only holy grail of trading is diversification, and this is true. Because if you think about it, if you have uncorrelated hedge, they balance each other to bring a plus every single quarter, okay? But if you only rely on the strategy, let's take a strategy over 5 years, okay? If you close a quarter negative, it's nothing big, right? But if you base all your life only on the income from trading, on one strategy, and that quarter you don't earn anything, what you do? What you eat? You eat the drawdown. You get the groceries with the drawdown. So that's the point. And when you have multiple strategy, also multiple structural model that edge each other, I think this is the best way and realistic way of taking trading as a wealth building method that is really sustainable, not as a daily income method like all the people want nowadays.
That's the problem. I think, well, first there's one side of the coin, which is people love to take a side in the debates. You know, I put myself also as a guilty part of the system because and we at some point, because it's great for views, it's great for engagement, like one approach more than another one, right?
Yeah.
But at the same time, we don't say our approach is the only one. It's unique. It's one model for life. There's this lifetime models.
Yeah.
And people think that's, you know, something. First you choose based on a side, more like at the stadium. And what do you think are the risks of this?
So the risk of this is the fact that you fall in love with the strategy, you fall in love with the model, and you ignore completely one concept that is necessary to understand, that is edge decay. Okay, I don't take sides. I don't bet all my wealth on one system, because tomorrow IVB can stop working. Now, for example, let me give a really straight consideration that a lot of people will not like, okay? I think the market will completely change in few months. Okay, so a lot of the strategy will not work anymore. They are introducing the 24/7 market open for the equities and also the single stock futures. Imagine now the option flow they can hedge on single stock on the futures. Imagine how much this change having Saturday and Sunday as open market. Imagine not having the intraday gap. Like everything will change there. The strategy, the overnight drift will probably disappear, and how it will change the zero DT if the market never close for that day. Okay, so I think we will see in the next 1 or 2 years a lot of structural changes in the market, and this is the strongest demonstration that you cannot rely on something and hope it will work forever. You will be really disappointed if you think this, okay? So I don't believe in one model for life. During my life, I started with price action, okay? There are strategies that were working there that are not working anymore, okay? Let's take, for example, the turtle trader. They make hundreds of millions with that strategy. We validated it in a quantitative way. Doesn't beat the benchmark. So it's not better than buying and holding S&P 500. So still makes money, yes, but what's the point if you can just buy S&P 500 and invest your time in something else? So the fact of taking sides is creating this cult in the industry, no? Yeah. It's better this, it's better that, and it's good for some sides because people need to identify in something, but the reality, it's more complex than this. I would love if there was a strategy that I can rely to get a daily income every single day of my life. Okay, I will be the happiest person on the planet. And I think with Luca, we validated more than 1,000 algorithmic strategy. Now we have Matteo Conti. And the fact is that there is no single strategy that can get you money every single day. Okay, there are portfolio that can get you money every single quarter. Okay, it's not a guarantee, but they are really stable. But if you treat trading as a daily income, I think you are bound to fail.
Do you think trading is a cash flow income?
No.
Not even with prop firms?
This is a different game.
What is the controversy here? Yeah.
This is a different game. Like, I got close to the prop firm years ago, got my bank account blocked because I asked for a big withdrawal from one prop, and then
The one that got investigated by CFTC.
yeah, they got investigated. So also people that withdraw from that prop had problems. Okay, I don't want to make the name, but anyway, I took enough money, more than 6 figures from prop. I don't think that prop is something that you can treat as a personal account, like building, because there is not only the market risk, there is the risk that this prop will disappear for regulatory perspective or for any other problems. Because remember that nowadays the prop firm industry is not regulated. It's not real money, it's not demo money at all. Some of them classify themselves as statistical analysis platform or virtual gaming license. Like from the compliance perspective, it's really dark, okay? If you treat prop as a cash flow business, I think for the prop, this is the best way you can treat prop. Okay, you can try to take as much money out as possible to build then your personal account and be independent from a third-party entity that every time you click, I want to withdraw, it goes to the risk team. Let's see how many payout we have this month. Maybe we can pay you or maybe not. Why? Because someone in India hedged your position, so probably you are doing prop firm hedging. No. Do you have way to check this? No. So the fact that it's discretionary, the payout, and maybe you worked 2 months for this payout, makes me think that the best way to approach it is from a cash flow perspective. Now, I know guys that make 6 figures per month from prop firm, okay? They can live comfortably out of it, okay? Still, they take this money and they invest partly in the business of scaling with more account, partly in personal account, because they know that this model is not something that you can rely to build your life on. It can change. Tomorrow the prop can change the rule. I don't want to make names, but how many rules they change in the last 3 months in the prop firm industry, no? So that's my view on the prop. On the personal account, I think trading is not a cash flow business because you can have an edge, you can have an expectancy, you can have a really good profit factor and a Sharpe ratio, but you cannot predict when this edge will unfold. You can be negative the next 2 weeks and you can have an extreme profit in 2 months that cover for everything and also generate additional profit, okay? And we saw now we are starting to develop also algorithmic strategy with you on the option side. We see that also the best model have their downside. Let's talk about the Trump tariff. Also the best model, the best MAR ratio, the profit factor, they go down when the market environment is not suitable for them, okay? And now we need to go too technical. We should talk about the gamma regime, the GARCH to understand the regime of the market, but the markets behave differently in different times of the day or of the week, okay? So if you apply a trend following strategy in the wrong environment, you will lose money. There is no way of avoiding it. No, but I would have understood this because there is, no, you will not have. After the fact happens, it's easy to say. But nowadays, if we go on the algorithmic side and we test everything, we know that every strategy has its downside. Maybe it's low liquidity environment, maybe it's sudden news, can be anything.
Do you think it's more market regime or edge decay?
I think it's both of them. Like market regime, it's what you can study to improve the performance of your strategy, avoiding the phase where your strategy doesn't work. Let's take an example. In literature on the option flow, they say that negative gamma, it's amplifying a movement for the market maker perspective, and positive gamma is compressing a movement. Okay, we tested this, proper data, okay, and what we found that yes, but it's not so big of a correlation. It's not something that removes. Maybe it can boost a profit factor to 0.2, 0.3. It's a starting point, okay? Then you apply GARCH to this, and you understand that this specific phase of the market is improving another 0.15.
What is GARCH?
GARCH is a method to understand and to estimate the regime of the market. Okay, so it study, the market have a memory. So it study what the market is actually doing, and using the market memory, it estimate how the market will behave in the next 5, 15, 20. Then there are multiple applications of GARCH, but this is the study that look at it, and it's really good. Because when the GARCH environment is bad for volatility, expansion, a lot of times you can see from the IVB fake breakout. It's not a holy grail, but also boosting your win rate by 7%. It's worth it. It's a study that is worth it, okay? And so this is for market regime. So market regime can improve your strategy. What can break your strategy is edge decay. For example, we go on one illiquid instrument like, I don't know, let's take any new crypto or penny stock, okay? Let's take a penny stock. I have a really incredible strategy, okay? I share this strategy to you, and maybe you have a personal account of 25 million, so you take heavy execution, the edge can disappear because the amount that you execute can already fill the gap of the opportunity. So edge decay is real. And when they say if you share your strategy online, algorithmic strategy, you can destroy your edge, it's true. It depends on the asset. On the S, it's not so easy, okay? But still, now that orb got viral, probably in the next 3, 4, 5 years, the edge will decay also there, okay? On the politician side, it seems that it's not happening because there are thousands of people copying. But I think also this is because the drift is being created also the people buying after the filing, you know? So politicians are making even more money because they buy the correct stock, they file, then me and you enter, we drift even more. It's like a Ponzi scheme because the last guy to read the filing is the one that say the market collapsed down.
And this thing of diversifying multiple strategy, what it does at the end is smoothing the equity curve of your...
Smoothing the equity curve and improving the Sharpe ratio.
Improving the Sharpe ratio, yeah, right?
At the end of the day, that's the goal, no?
And for those who are not familiar with Sharpe ratio, why is it important?
This is important because it's a metric that is not based on pure profit, no? And what I always advocate for on the World Trading Cup is the fact that the challenge is based on net performance. This is not a good metric to evaluate a trader, okay? Because someone that did a 150% with a 45% drawdown cannot be on the leaderboard above someone that did 40% with a 3% drawdown, you know? And the Sharpe ratio will be better of the one that did 40% and 3. So the Sharpe ratio is a metric. Imagine an elastic band between the profit and the risk. Okay, the more the elastic it's tied on the profits and the less it's tied on the risk, okay, the more the net it's favorable, okay? So it's how much you can extract from the market for every amount of risk that you put in the market. This is the summary to make it simple. Now, when I talk about Sharpe ratio or expectancy in the retail world, they are like, what is this? It's a new enigma.
Risk-adjusted returns, what?
And this is another point, because there is this movement that is saying, look, just buy and hold S&P 500, the ETF, okay? They completely forgot about risk-adjusted return. Completely forgot. Because the edge, like S&P this year can make 10%, okay? The hedge fund makes 9. And you think, okay, it's better S&P. Yes, but the hedge fund, okay, maybe is having a Sharpe ratio that is 3 times more, okay? It's having a less drawdown and its market uncorrelated return is different. Specifically, when you have wealth, you want not to be completely dependent on the market. You don't want to be dependent on B2 traveling to Iran today, creating a disaster, and your portfolio is down 30%. Okay, so you need always to put in perspective of the goal. What is your risk profile goal? And then you can understand what's better for you. Also in the trading space. Nowadays, if you think you can, with your $1,000 or also $5,000 account, go all in your strategy, extract money every single day and live out of it, I would really love to say that it's possible, but 9 times out of 10 you will be disappointed. There are outlines, there are people that get rich with really small amount of money because they push on the gas, okay? I'm one of them. I went super aggressive in one bull run of Bitcoin in futures leverage, like a degenerate. But this is something that you can do when you have enough experience and when you can afford to lose that money, not when you put all that savings there. And this is like also Tomogar, no? He's a heavy hitter. He goes really aggressive from single position, but he knows what he's doing. He have a JP Morgan experience, so he have a lot of years on the background. So first the experience, and second of all, when you go as aggressive as that, expect also to have really big negative days. Okay, to make 6 figures per month out of trading, expect also to have sessions where you will be down 5 figures, okay, where you will lose 9,000, 10,000, 12,000. It's part of the game. If you increase the size, it will not always go good to you.
What do you think is stopping new traders from reaching those size? Like maybe, I don't know, an average retail trader that starts trading has $1,000 in their account and they want to make a living out of trading. How do they get there?
I don't know, because the majority of people don't want to put in the work, and they are not so humble to work for it. Okay, for example, when I started, I was doing server monitoring at night from midnight to 8, and I saved money to fuel the account because I understood that the concept of ROI is return on investment. And we go back to the phase and the fact that trading is not a cash flow business. And also, if you expect to live tomorrow out of trading, you have your account, okay? Every profit that you will make every month, you need to take out of it. And you lose the best part, that is the compound interest. So I don't have advice for people that want to start really low on capital, and the first expectation they have is to live out of trading.
Why do you think they believe this is possible?
It's the industry. Like part of the problem is the guru and the narrative that they take. Of course, if I take a MetaTrader screenshot and I make a challenge from $100 to 1 million, okay, of course, the expectation that I create in people, it's the fact that they can get crazy rich. That is amazing for the guru that does it, because he makes a lot of money, he sells a lot of courses, and people see him as a god. The problem is that flip, if it's true, I don't know if it's true, okay, but if it's true, like
it's not, but
if it's not, but let's say it's true, okay, and if you build a track record doing this flip in 1 year, and you go in Abu Dhabi, the hedge fund will throw billions at you, billions. The point is that I strongly think that these performances are not possible, okay? And also, if you take outline performance that are certified because it's on a futures brokerage, like the one that did Larry Williams, the risk that you need to input, and he said in an interview with Wakar, he said, look, I was going really aggressive on risk every single position. And when Wakar said, what's the risk profile? He said, just don't be wrong. Because if you are wrong on that size, you can really damage yourself. And now we go back. You can do this if you are competing, okay? If your goal is the net profit, but if your goal is the sharp ratio
and surviving, yeah,
and surviving, all your investor, if you have a hedge fund, will walk away. Say, what the fuck is this? You lost 10% of your account in 1 week. What are you doing? You know? And when it goes good, it goes good. So this profile, I cannot say that I don't like this profile of risk. On crypto, this is what I was doing. Then was not a losing position, was the failure of the entire broker that kicked me in the ass. But at the end of the day, if you have enough experience, you can try some shot, highly leverage, but you need to know, to have the right knowledge. For example, when we were planning to build a position on crude oil, on the options, if we ultimately went aggressive on the size, we all came out with 7 figures at home. Okay, aggressive with the capital that we have. The point is that you don't want to ruin an account, okay, to take this heavy hitter shot. And even when you have high probability from the macro, it's still uncomfortable to take this amount of risk on a single position. Because yes, maybe you can be right, but you are still putting a lot of capital in one single sample. And that's what I don't like. And that's the reason I take a lot of execution in the scalping over the long run, to diversify the risk and to be immune to the condition of the market of today, tomorrow, but watch the long-term performance.
Mm-hmm. And so for a young trader who's starting with a small amount of money, let's say below $5,000, what do you think is the right path step by step?
I think, first of all, you need to validate your strategy. And this is something no one does. Okay, they start from a YouTube video, 90% win rate and stuff. Test your strategy. Nowadays, we have incredible system with AI. We have market data that are the cheapest they have ever been. You You can download thousands and thousands of data. Even if you are a discretionary trader, validate that what you are doing really works. The IVB, I validated algorithmically. I start from a point in my hybrid trading where I know that my bias system works. I know how the option flow work. I know what the order flow gives me as an edge on a trigger, because we can test now on deep charts the trigger probability. So I have 3 lines of validation, and then I put my discretionarity in position management, in environment. This is how I do it, okay? This should be your goal if you are starting, first of all, and should not be, I want to live out of trading tomorrow. If you go to university, okay, you cannot expect a degree after 6 months. You need to learn. The phase 1 is to learn, then to work to scale capital. And this is what they don't like, okay? I did freelancing, I did night shift, I did everything, okay? I started and pulling all my money, lowering the expense that I had to build capital to do it, okay? Because otherwise, the margin requirements that I use for the bull run in crypto will not be enough to sustain all the bull run. It's enough one movement, you lose the train and you start back from zero. And to have the right expectation, So another thing I fight is they take my performance in the World Trading Cup and they say, okay, let me calculate. I start with 10,000, I go compounding, I make 500% per year because they sum all the amount. Okay, 4 years I'm a millionaire. Okay, this is what they think they do. They think that these performances are replicable every single quarter and that they are sustainable. But I explained that for the World Trading Cup, I used first a validation phase, okay, where I validate the edge on the 3 accounts, and then I executed and deploy maximum risk on the challenge account. Okay, this one you cannot do in the personal. And more than this, these performances are done from 4 or 5 times more risk than the personal account. The year that I made 500% would have resulted in a 50 to 60% in the personal account, maybe a little bit more, 70. Okay, but this is an outline. This was a year where IVB did also in algorithmic side an incredible performance. Okay, this year, the first 3 months of the year were really tough for me. Okay, I ended up in profit, but I really suffered. A huge amount of consolidation. We were trading there. It was not moving anything. If I didn't add diversification there, I would have relied only on one single strategy. But the fact that when you are a discretionary trader, you can adapt and you can have mean reverting phase is what keeps you surviving there. Because the human brain is still superior on this from the algo. Taking multiple pools of data, the option flow, the order flow, and reading them in a binary way, if it's this, then this, then this, is not, we have this situation in the option flow, okay, we have this level that is strong, we have the news coming out here, I see the contracts getting lower, I see the order flow aggression on the long, I can go to the call wall, taking this risk. All this reasoning, you cannot put in a machine nowadays. Okay, you can create quantitative method, but you cannot put a human reasoning in a machine, not yet. So all these reasons are the ones that I strongly advocate to build an hybrid system where you validate and then you trade discretionary. Another advice that I have for people that are beginning is the fact that prop firm for them are a good tool. Because with prop firm, first of all, the maximum risk you can take is the prop firm account, the challenge that you pay. And this is keeping you from doing degenerate stuff. So putting your savings or putting a lot of money and losing all of them. Second of all is the fact that if you are good in prop firm with all these rules and you have a profitable model, there is a big probability that you will be also profitable in the personal account, even more. Because the rules in the future side of the prop firm are really aggressive, really aggressive. So that's it. I don't have an advice and a roadmap to get really rich in a short amount of time because it was not like this for me. I worked my ass off and I pulled multiple streams of income to arrive here and to pull the capital. And still nowadays, I understand that if I let the emotion take over and I bet all my wealth in one single strategy, as fast as I did it, I can lose it. Okay, and there is no world best scalper, there is not the best trader, there is not hedge fund manager that can remove the risk part. Okay, yes, I have some achievement, I'm a good trader, but still nowadays, a title doesn't remove the risk that you can have in your personal account when you approach trading like this. And beginners should understand that if people that are in the industry from years approach risk like this, there is a really low percentage that you as a beginner in a CFD unregulated broker will be able from a small amount of capital to change your life with $100, okay? I know that this will get a lot of hate because also I wanted to believe this in the beginning. So people watching it are saying, no, but you are depressing me. I'm sure I can get rich. I know, okay? But at least I will take you down to the floor before the market will do this for you. And this will happen. If you have insane risk, you will just have $100 less at the end of the year.
So what do you think is a realistic return for a retail trader, let's say on a yearly basis?
I don't think there is the concept of realistic returns because it's all based on the risk profile. Like, first of all, you should understand how much you're willing to risk, okay? And then you can base your risk profile. If you are an hedge fund and you are in the 20, 30, 40% per year, you are in the top 1% hedge fund in the world because you are beating the benchmark, okay, consistently, I mean. And let's talk about Medallion, the best hedge fund in the world. They were around 40, 50, 60% per year. And people that started with Medallion and put maybe $1,000, they ended up with hundreds of millions over the long term, okay? For retail traders, you don't have this constraint or low risk, so you can expect a little bit more. I just advise them to not believe that the realistic return is flipping your account month after month and lived out of it with a really small capital. The realistic return you need to base, first of all, on how much you are willing to lose, how much is the drawdown. Let's take, for example, the algo strategy, okay? Let's take one option strategy. If you are willing to sustain a maximum drawdown of 20, okay, maybe you can expect a return that is 3 times this, okay, 4 times this, but you need to understand that you are taking way more risk than the hedge fund. So it's not that you are better than them, because maybe they have a better Sharpe ratio, okay? But if you optimize for net return, okay, then in 3, 4, 5 years, if you have enough capital and you build, then you can have enough to live completely out of trading, even if I think this is not a smart decision.
Why?
Because trading doesn't give you predictable income. Like, the income out of trading can be concentrated in one quarter. You can have January, February, March that are slightly positive. You can have the Q2 that is slightly negative. You can have the Q3 where you make 90% of the return of the year. And then you can have the Q4 flat, slightly in profit. Okay. So at the end of the year, you make the same amount. The next year, you can have all the profit in Q1, Q2 stable, Q3 drawdown, Q4 profit. Okay. So as you understand, you made the same profit 2 years, okay, or around there. But the distribution of return is not always the same. Now imagine that you need to take money out every single month to pay the bills and stuff. You will remove capital from your account the moment your account needs the most. Because when you are in drawdown, if you add to it the capital that you need to remove, you will never scale. That's the point. And this is the reason I think trading is not smart on treating it as a cash flow business. I think trading is the best business in the world to build wealth. When you have capital, to scale capital, this is the number one activity in the world. And I know what they will say. Yeah? They will say, you say like this because you are not capable of turning $1,000 into 2-3 millions. Do this in a futures broker, okay?
Bring an audit,
and then I guarantee you that I will pay your flight, I will fly you here, and I will put you in the hedge fund. I will be really happy to do it, okay? But not with 1 or 2 samples, with at least 500, 600 samples, like I did in the World Trading Cup. If you have this return, then you are in the top 0.0001% of traders, and you deserve all the success in the world.
Because a person could say, hey, if I make money every single month, I just need a prop firm account, and my strategy makes money every single month. So I'm going to just...
The prop firm, that's what I said.
Yeah.
As a cash flow business, if I need to start again, I will start with prop firm. Because prop firm, first of all, they have asymmetric return based on risk, because you pay the ticket of the challenge, but if you are a good trader, you have more leverage, more power, okay? And you can diversify with multiple accounts. And people that make a lot of money out of the business, what they do, they crush some accounts, no? They go maximum risk, but when they get a payout, it's a really heavy payout, if they pay. And this is an approach that I love. It's not my business. It's not what I do. Okay, I don't get 6 figures from prop firm world, but per month. But I'm more on the personal account. But I think this one is really smart. The realization that you need to have is the fact that it's a different game. Sharp ratio is useless on prop firm. They demonstrated with risk geometry that you can pass the prop firm also with 0 expected value if you have the correct risk protocol and if you stay inside the rules. You need to study deep. Or Gianluca, for example. There are people that build glitch on this world. You know, they hedge multiple platform, they make a lot of money out of it. So they are like an arbitrage system for the prop world. There are multiple ways of making money in the field. And if I want a cash flow business that I don't want, because my goal where I am now is building and growing my wealth, I don't need to live on a day-to-day base with a salary. I have enough to get enough return from the capital I have. But if I should start from zero, I think the cash flow business is the prop firm, and the wealth building system for people that have capital is the personal account, or the best learning system if you want to learn. Just have realistic expectation. Don't expect to flip your life in 3 months with a small account.
Right. What do you think is the best approach, let's say the best strategy to start, or the best places to find an edge as a beginner?
I think the IVB is the best edge there is nowadays, because it's on a liquid asset. It works on all the US equities, also on the KOSPI and on the Nifty we are testing now. And it's simple, and you can build on top of it, like starting to build from something that works. It's like if you are taking a shortcut. It's not a shortcut to make more money, but it's a shortcut in years spent trying to test stuff that doesn't work.
How does the IVB work?
The IVB works on the fact on understanding that US indices are predictable on where the volume will arrive during the day. You know when the volume will arrive, and you know the 2 hours where the maximum volatility will be there, okay? 8 sessions out of 10. So you know one thing that is consistent from years. I hope when they will open 24/7, it will not change, otherwise I'm fucked and I need to start building again. Second of all, you take the top range and the bottom of range of the battle. Okay, so you know that there was a liquidity passive liquidity wall on the top and on the bottom. Third step, I'm giving sauce here. You want to see also if you have options level, put and call wall, if they are there. Once one side breaks, okay, the probability that the day will continue in that direction is really high. What's the problem of this? That a lot of times it does fake breakout. So during the years, I find out that the best filter is using a strong delta bar when you have a breakout. Even better if you have aggressive buyers there, market participants with MBO, that you can see that is one market participant, not many. Okay, so one big player betting in directional there, and then you can cover yourself below this aggression and take really asymmetrical risk to return. Not every day, but when it run, it run. And Nasdaq, it's an asset that is really good on this because it's more directional than ES. ES is more slow and liquid. Okay, still profitable on ES, but I show you the equity line. It's different. It's not so smooth. Actually, the best equity line that I've seen is on the Nifty. So Indian people,
and we have a lot in our audience.
Squeeze it, because the Nifty, it's one of the best directional assets I've ever seen.
Nice. What is the new world-class edge?
The new world-class edge, it's a pool of talent from all over the world with a simple goal in mind: bringing realistic expectation to the trading world for free. So we have ex-market maker, we have algo trading expert, we have hedge fund manager, we have ex-banker, we have world trading champions, we have everything, okay? And if you are a really good trader and you want to share your experience for free here, this is your stage. And the goal here is to clean a little bit the expectation of the industry, and more than this, to give a realistic, professional overview of the world. So someone from the market making field, like Matteo or like Freddy, can give to me and also to you something that being retail still nowadays will never achieve. The validation part that Matteo explained to me helped me a lot in my career. The explanation on how Freddy was hedging 2 billions per day as a market maker gave me an explanation on how the levels on the option flow work that no retail trader will ever be able, because he was doing this. And I think that in life it's impossible to be cultured about everything, okay? And you need to surround yourself with multiple professionals that can give you vertical knowledge on what you know from a superficial level. And this is what World Class Edge is providing to the trading world.
Mm-hmm. So how now it became from a paid mentorship type of model to a free, a completely free model, and now it's let's say I think the cool thing we did is in order to provide this high quality education, this high quality people, and this high quality visual part as well, which is absolutely phenomenal. We chose one prop firm partner, one brokerage partner, one platform partner.
Yeah.
And I think, and I hope in a way that people will appreciate the fact that it's still, everything is for free, and that the model now it's planned in a way where we basically reinvest
everything,
all the profits from the affiliates and from all this kind of stuff to make a better product, to get it to more people, and to make the whole experience in World Class Edge better. What do you think is, let's say, within the World Class Edge platform, what are the cool things that traders will find and which will invest on?
So let's start from what you said in the beginning. World Class Edge started as a mentorship program with the TTT team. So with the team of Tom Warwald and Patrick Neal and Serge. And I think that Tom, for example, is one of the best psychology mentor that there is out there, because he goes really deep in the psychology nature of the people. And the more I grow, the more I understand that the approach of starting with psychology probably is one of the best one, if you are a discretionary trader. And Patrick Neal, everyone knows it. I don't know how many times world champion, amazing guy, really chill, simple strategy, and people love it, okay? Going on with time, we find out that getting the best professional but putting a price ticket to it was closing the gate to 98% of people. And we find out that the stuff where we can continue to afford this level of production, fly professional here, and to be able to afford the best hotel for them, to give the best experience to them, to pay for their time because they are providing value here, was to sustain the business with some affiliate that we all reinvest on the company. So instead of saying, look, you pay a ticket to enter, you enter for free, and if you enjoy, you give back with a brokerage or with an affiliate there or with a platform, you contribute, because the affiliate is what pays for this and make all of this possible. And I think that people love the transparency and love what we are building here. And I think it's a 10 times better model if the goal is not to make money, but the goal is to get the biggest audience there is in the field to come close to a transparent reality about the trading world.
Definitely. And I think what we bring also is the knowledge we bring in World Class Edge is not superficial at all.
No.
Because I think this is also one of the problems in the trading space. People like, because our perspective now, as people who have tried to delve deep into every single topic and trying to learn the most out of every single topic, up to the point where we understand the market so intimately, but that's our perspective on the markets. We see the markets, we view it in a certain way. A beginner who literally knows nothing about the market is exposed to a much lower level of information.
I know where you're going.
So what do you think are the biggest myths around how financial markets work for a person that is, let's say, in their first 6 months into trading, what they're being exposed to that is completely wrong or misleading?
I think they see trading and financial markets as the rebel way. I explain, I go deep. I don't want to do university. I don't want to work. I want to get rich from home and prove all my friends wrong and my family wrong, okay? A lot of the narrative about trading is this Wi-Fi money, okay? And I cannot blame people, because if 99% of the advertising, and also I receive 100 advertising per day, it's a coconut on the beach, a martini, and a MetaTrader, okay? With all the respect to MetaTrader, but you cannot show off only profit without explaining the process. What's the size of account that you are trading? What's the risk profile? Of course, if a 20 years old guy sees $20,000 of profit per day, he will say, okay, I'm done. 3 candle moving average, better than working for a salary and a job, no? The problem is that this is contributing to make the industry toxic. This is contributing to make people that deliver this message richer and richer every single day, and people that fall into this belief poorer and poorer every single day. And that's the biggest myth in the industry, that this is possible, that this is the real nature of trading. And I cannot blame the people, because I started like this also. I got introduced to trading with one illegal instrument now. This is the binary option, no? Mm-hmm. And the fact that still it's crazy is that after some year, I still don't understand how I managed to make money with it also, okay? Because it's up and down, and you need to predict in 60 seconds. Maybe I was already a scalper there. 60 seconds predict where it goes. Maybe there was born my nature ability to do it. And I understand how the industry works. I understand that a lot of people get close to this with this kind of narrative. And I think the social media game of trading, it's not trading, it's more close to gambling and entertainment. Mm-hmm. It's, I make content not based on how I can give more value to the final audience, but I make content based on how much I can keep you hooked to the screen, no? And this one is creating a cascade effect where you don't think about I share value, you think about I need to make the most stupid video to get the most amount of views, to convert the most amount of people to my paid group. Something like this, no? Mm-hmm. And like this one, it's creating multiple problems. It's creating the problem is that people that stand out are people that deliver this kind of message, and people that get this message delivered contribute, are the majority of the part, contribute to share this message with other people, okay? And the fact that is said is that they are self-blaming. So, this guy did from 100 to 1 million. I didn't manage. I'm a failure. You know? They don't understand that this is not realistic. And I would like to open the concept of white labeling a broker that you can
follow. There's a huge net of lies behind all of this, for sure. And the problem is they cannot be verifiable at some point, you know? Like, there's no way to verify that claim. So for an average person, it assumes a person that just doesn't know anything about trading will see this tattooed guy with chains and you know, Louis Vuitton bags all over the place, and you know, a Brabus or a Lambo with this blue screenshot that says $5 million in one trade. And will say, "Oh my God!" because he sees the number.
Congratulations,
and it's just specchietto per le allodole. We say like it's a mirror for, I don't know how to say in English, but it's crazy because people like me, myself, the first time I got introduced to trading, the guy who introduced me to trading was showing me a account that was, I think, I don't know, $3 million in profit. You know the guy also. I didn't know what a demo account was. But of course it was a demo. And he told me it's a great strategy. It's like a non-stop loss strategy. You just buy and wait until you become a millionaire. This
So
literally
buy and
was,
hold.
yeah, but on a Forex thing, no stop loss, huge leverage, right? So, and I believed it. Because I was ignorant, I genuinely believed that, oh my God, this guy is a millionaire.
But this is not surprising because this stuff, okay, how much experience we have also in the social media game? A lot. This stuff pays.
Ooh.
Okay, if nowadays you create one person AI generated, not even AI generated, you take someone, okay, and you start to deliver this kind of message, people will think you are stupid and retarded, no? People will think that they can do what you do because they want to believe in the dream. Mm-hmm. They want to believe in the dream, okay? And this is like the life also of startupper, no? They say 90%, 99% of startup fail, but if someone say, look, I have this protocol where I give you this, you apply to your startup and your startup becomes a unicorn, everyone wants to believe it, no? Of course, it's the nature of the human being, so I don't blame people that believe it, and I don't even blame people that have this kind of marketing because for them it works. The point is then it creates a wrong expectation to people.
Should we blame the regulators because they don't do anything about this?
I think the problem is the fact that CFD world, the unregulated world, it's not mandatory to regulate. Like there are brokerage or white label where you can avoid having any license, so you can do what the fuck you want, okay? And so it's not even the problem about the regulators, because the regulators, like I'm not covering this company, it's not regulated. It's you person stupid that put money on this broker incorporated in an island in the Caribbean. So also it's not only regulator, it's people that don't do some research.
It's awareness in general.
Awareness, like I never seen this happening in a futures broker, no? And that's the reason I think that, yes, maybe it takes more time to learn because you need to understand more stuff in the futures, but at least it's something where if you build consistently during the years, you can really have a shot at becoming an hedge fund trader. You can really have a shot of deploying your strategy with institutional capital. This is possible. In the CFD, if you go to Abu Dhabi, ADGM, and you go with a CFD account, hey bro, the circus is there, and it's not a problem of CFD, it's just that there is no way of validating this because the contract don't get wired through the CME group, so you don't know where it goes. Okay, sometimes they take the opposite side. And this is not to say that CFD is not a good instrument because, for example, for multiple strategies where there are liquidity constraints, the CFD or for trading the VIX, I've seen strategy range bound on the VIX that really works on the CFD broker that lets you use it. So this is not an attack to the CFD. It's an attack on the fact that CFD are not transparent at all and they allow these people to grow.
What do you think it's the three biggest red flags for a beginner who doesn't know anything, how to spot a fake guru?
Not only a fake guru, someone that is too aggressive on the message that you want to deliver. For example, if you start to see a profile of a trader, okay, where the only topic is supercar, okay, and stuff that can use your emotional mirror to convert you to a funnel, so no technical stuff, not background experience, no content where you can see this person actually doing what he prays, okay? Because this is the best marketing, Andrea. Like, if people see you doing something in real time, this should be normalized. They see, okay, this person is analyzing late, this is doing this. But if you do everything after, or if your profile is only mention Lambo, beautiful woman, like you are working on the easiest way to convert people, because every man wants good car, a great mansion, a beautiful wife, or multiple.
Someone do, yeah. Yeah, and they sell you the dream, and they're really good at it.
They're really good at it. So from the marketing perspective, it's working. Like I imagine Ormosi, will say, yes, this is something that works. So if you don't care about the message you deliver and you care about numbers that go up, it works. I cannot say, no, this is something stupid. It works for the social media game. The point is that then people believe this is possible and they do huge damage to their finance.
So these are the biggest red flags. What are the green flags?
The green flags are, first of all, if you ever saw the person explaining a technical concept, okay, in a way that you can take the concept and validate for yourself. Because people that really care about the fact that you can grow and learn are the ones that let you come to the realization that what they use works. They don't assume that you believe, but they give you the concept and say, look, try to prove me wrong. Use this concept, validate it, and tell me if what I'm saying is wrong, first of all. So you need to have technical concept on YouTube, on Instagram. You need to see that these people are technicians, not frontmen of a funnel that only brings you to supercar, mansion, and stuff. First red flag. Second red flag is any public competition or futures, brokerage, or options, anything they prefer, okay? Where you can see that over a large number of sample, the model works, okay? And even here, there is a problem, because if the model is discretional, even if the person is good and is profitable, it cannot guarantee or say, look, get these results in 7 days. These funnel are still red flag. Because even if the person is profitable, they need to be honest with you, saying, look, trading involves risk. You can have up and downs, okay? And on top of it, your strategy can stop working in 2 or 3 years. So I want to give you the concept. Let's take, for example, what we do, okay? I explain you the nature of the market, not the algo, how it moves. I hope it goes there. There is a secret conglomerate of people in the Vatican City that press a button. Okay, but I explain you the nature, how the contract enter in the market, the filling system, how it works, what's passive order, stuff like this. I give you all the instruments to work on real data. Okay, I give you my edge, but I give you how I build this edge. So if in 1 year any edge is not performing, you have the freedom and independence to go on your way. The third one will be, and this is the one that's really difficult to find, live trading. So not only the person show you a large amount of sample, explain good, but is willing to jump in a call with you or with multiple people and does what he does openly, where you can see the positive live days and the negative live days. And then you can take your conclusion. Is it for you? For example, there are lives where I take 4 stop loss, but I'm not shy about it because I know that it's part of the process. Okay. And this is the ultimate level of transparency. The maximum level of transparency will be that this person also run an hedge fund. So they have a background on the institutional space, and this person delivers huge risk and capital. But in this case, I strongly doubt that these people will have the time to do education.
Yeah, that's the problem.
It's a balance, no? And also, if you run an hedge fund, I think that even doing free education have no incentive for us. At least for world-class edge, doing free education have incentive, okay? Because we get a great network of people, we get to the maximum amount of exposure worldwide, and still, guys, let me be honest, we have an interest, okay? Because we have affiliate partner, and one affiliate partner is Deep Charts. So we have an interest here in doing all of this. But we do this at least bringing you the most professional traders that there are out there that wants to participate. It's open to everyone. And we grow with transparency a software house. That's it.
And you get everything for free, which is awesome.
Yeah.
And if you were to, let's say, give let's say not a rating, but let's say the stages where a trades find itself, right? Because as of now, the average trader, let's say, starts with YouTube, with gurus, with Instagram, with ads, then moves on and kind of realizes it's harder than it is. Then, what's the average road of a retail trader now, and what do you think are the better options? Without having to go through the whole, wrong expectations and then realization and then maybe failing for even 5 to 10 years. There's a lot of people that just, have started 5 years ago and still are not seeing profits. Also, there's other ways. There's other ways to succeed in financial markets that are also maybe not necessarily trading related. There's a lot of careers maybe as well. There's bringing your track record to a hedge fund or whatever that is. What is, let's say, the options? What are the type of paths that you think are worth taking for a person approaching financial markets?
I will give multiple examples about this. Okay, so first of all, the common approach is you enter in the space with someone with heavy marketing. Okay, so you think you can get rich fast, you get burned. Okay, you understand this is not possible, and then you have two choices here. Either you think trading or financial markets are something is not for you and you leave the field. This is the most common path after you get burned. Or the second one is that you start building and diving deep and research and build something proper. Okay. The second path is the one that it's more rare, but these are people that usually then comes to proper education. They arrive to Tom Hogarth, free content, they arrive to World Class Edge, they arrive to Chart Academy, they arrive to the free content we have on YouTube. So they arrive to people that are really trying to make an impact in the industry. And the third road, and this is a funny story, we had one student that was, I cannot make the name, was working with us in validating strategy from the algo side. He was trading stuff, and now he took during the years he was working with us, he took the institutional path. So he studied in university, he did finance and stuff, and now he's working in the Rothschild. So it's really nice how many paths you have, and we cannot expect that all the people have the same necessity, no? There are some people that want a stable income every single month, and in the financial space, the quant, for example, Andrea, they are paid huge amount of money. Like if you arrive to be a quant in Jane Street, okay, or somewhere like there, you get paid $500,000, $600,000, $700,000, $800,000. So still, it's more than you can spend, okay? No, not more than you can spend, but it's enough to live a really comfortable life. Of course, it's extremely stressful. And of course, nowadays, the more the artificial intelligence develop, the less people they will need, because the market is changing completely. But there are a huge amount of path outside the retail trading world that you can take. Or there are crosswalk. Let's take another example. You are a trader. You research and build for yourself while you work, you build your strategy and stuff. You build a track record. You want to get capital allocation under an hedge fund or provide, you can do it. Okay, but you cannot do it with CFD. So that's the reason I say, if really you want to build a career of 10, 20, 30 years, and I also consider myself at the beginning, I'm at the beginning, I still don't manage institutional capital. I will, but not yet. So if you want to build a career there, you need to start and put the proper foundation. And the proper foundation are exactly what we are giving you here at World Class Edge for free.
Now I have a bit of an off-topic question.
Yeah.
Because you mentioned that there is one of our... So we have had a lot of people that studied trading with us.
Yeah.
And for example, I'm thinking of another one, Andrea, that then became a portfolio manager. Then we had this guy you mentioned that went to Rothschild. And there was one specifically, which I think is the craziest story about the student that we have. I hope you understand who I'm talking about. That eventually really went to, work to, I think Deutsche Bank was it. And without mentioning his name, we're probably going to cut the name of the bank that I just said. We're going to just cut it out. What is tell us about this specific story and the craziest things you've heard.
It's crazy because this like this guy started directly with me from the CFD world. Then he moved to futures really fast because he understood that for short-term execution, you cannot have the constraint of the spread. So you want to have best execution. And the story of this guy is crazy because he sent me a track record that I was not believing. To be honest, I was not believing. I was thinking he forged some way. It was not possible. And then he did the same in the future space. And he disappeared from like 6 months, 1 year. I was texting him, how is it going? Like I have a video of him thanking me, you changed my life and stuff. I said, at least reply, no? And then he told me, look, Fabio, I didn't want it to be rude, but I enter here, this bank. He was a trader, so he was in the desk. And I have this position. I was like, after 2 years, you have this position. And I'm getting paid performance.
This position, how much we're talking?
No, this position, not in money. This position, he was like managing the desk.
The position, okay, work
the position of the trader in the desk. And they gave me an allocation of X amount. Okay, I will not say. They gave me an allocation of X amount. And then we need to cut also the bank.
More than 10 million?
Yes, more than 10 million.
More than 50?
And he was using, he was trading with futures and options at the same time. And then I remember this call because he came and said, Fabio, we are doing good, but you didn't understand that the flexibility that options give you in also the trades that you do is 10 times bigger in the management of the position. I really say it openly to me. I think you are good, but I think you are still too stupid to transition to option and understand that the flexibility that you have there is way bigger than futures. I was like, from that moment, I start to study options.
So the student became the master.
He became, I think he managed more than 20 times at the moment, 30 times my personal account. So he became the master and I have still a good relationship with him. We see if we want to come here. Okay, we see if we want to come here to give an experience. And then it's funny that after 2 years there, made ton of money, changed his life, is living really happily, he came back to retail.
Why?
Because he said that the freedom of spending time with your family, and you have a small daughter, okay, the freedom to spending time with your family is not worth the amount that you do in this high stress environment. And they were traveling a lot, so you spend a huge amount of time outside. So you see the other guy is super happy with the hedge fund, super happy. So it depends also on the person, what you're realistic. Let's take also Gianluca, for example, no? The goal of Gianluca have never been to make a lot of money. The goal of Gianluca have been to be able to live on an island. Free, okay, there to wake up in front of the sea and to live a really simple life. So it depends on what people expect. And he's doing it, not even trading, but taking arbitrage solution from multiple trading glitches. And I think this is fantastic because this is the real, not zero risk. The risk is that they don't pay you out, but it's the real net zero or delta neutral of the retail space.
Okay, now some rapid fire questions. Let's rank trading tools. And trading, tools, indicators, and, this kind of stuff. Not strategies, just tools. Let's start from the basics. Rectangles or trend lines?
Rectangles.
Rectangles or Fibonacci retracements?
Rectangles.
Rectangles or anchored VWAPs?
Anchored VWAPs.
Anchored VWAPs or anchored volume profiles?
Anchored VWAPs.
Anchored VWAPs or EMAs?
Anchored VWAPs.
Anchored VWAPs or Bollinger Bands?
Anchored VWAPs.
Anchored VWAPs or daily volume profiles?
Daily volume profiles.
Daily volume profile or cash session volume profiles?
Cash session volume profiles.
Cash session volume profiles or session VWAP?
Volume profile, cash session.
Cash session volume profile or candlestick charts?
They are different, but anyway, cash session volume profile for bias.
Candlesticks for timing.
Candlesticks only with volume.
Right. Cash session volume profile or volume by candle? Like volume, normal volume by time?
No, still cash session volume profile.
Cash session volume profile or footprint charts?
Footprint charts.
Footprint charts bid ask versus footprint chart delta.
Delta.
Delta footprint charts or big trades?
Big trades.
Big trades or deep trades?
Deep trades.
Deep trades or liquidity heat maps?
Deep trades.
Right. Deep trades or option flow?
Deep trades.
Deep trades or gamma exposure?
Deep trades.
So ranking 1 to 10 strategy types. Opening range breakout.
8.
IVB.
9.
Unicorn model.
What the fuck is this?
ICT unicorn model is the IFVG after the liquidity grab.
This is incredible. 11.
Ichimoku trading.
Ichimoku trading 10 if you are selling rice in 1840.
Trend line bouncing strategy.
Amazing to blow your account.
So if there's one last message you want to live to the trading space, let's say this is your last podcast ever and all of your content is wiped out from the internet today, what would be the one thing you would say to all traders?
Work simulation till you reach a point where you validate your strategy. Only execute what you already validated. Apply a proper risk management and keep your realistic expectation to trading, because you will pay with your money the wrong expectation as soon as you open your first real account.
Ladies and gentlemen, Fabio Valentini. Thank you very much.
Thank you, Andrea.